the SECRIF. Many of you know about that. We also received 121 million US dollars in multilateral supports between 2018 and 2021. We also have the CAT bond in place till 2023, and that again has been supported by our own uh, multilateral partners as well as the government of Jamaica. And recently, my institution, the Jamaica Social Investment Fund, we just been accredited to the Green Climate Fund. So that will open up, we hope, at least US $50 million in financing for DRR and those types of projects. And then, of course, if you're following the COP27, you will see that one of the outcomes has been the loss and damage fund, and we really wait to see what will happen with that fund. And of course, here you see that these are the investments that we continue to make. That's hazard risk reduction, operation and maintenance, mitigation and adaptation interventions. That's what, this entire strategic action is designed to support. So a little bit more specific about the fund. The fund is targeted at poverty alleviation. And so we employ a strategy of people-centered development. So we work a lot with the vulnerable groups. There's a gender focus around women and youth and the disabled in ensuring that they can be more resilient and not so affected when these disasters strike. So all our portfolios of financing will have that sort of people-centered focus. And every portfolio, whether it's agriculture, whether it's tourism, whether it's security, citizen security, crime prevention, every portfolio has a cross-cutting aspect of climate resilience and a climate rationale. So an important takeaway here is to ensure that all development programs have that sort of climate rational focus. That's our reality because of our vulnerability. We have evolved over the years. So what used to happen is whenever disaster strike, you would have a post recovery. You would have a specific loan or a specific financing program that recovers. Now what we have done is we are now integrating, like I said a while ago, the climate resilient focus. All our loans with the World Bank in particular have a contingent emergency response component. What that means is that you can immediately allocate funding through that program for emergency response. Once again, we have to do this as a design because of our reality. That's the CIRC. And then, of course, being more dominant and being more present in the space for climate resilient funding, like the GCF, like the Adaptation Fund, being more there to see how we can access greater resources through these funds is something that's important for us. Some key achievements here, I won't go through all of them, but I think our integrated strategy in Jamaica is, of course, environmental management. So where you have vulnerable groups, solid waste management is important. Their carbon footprint is important. Vector control. These are all the things that ensure that when natural disaster strikes, they have greater resilience. They're less likely to be flooded out, because of blocked drains. That's just the reality. And so when these things happen, you have to ensure there's proper environmental management, there's proper policies for waste disposal, there is, removal of disposable items from the waste stream, and then, of course, strengthening national capacity. So beyond investing in community-based infrastructure, you also have to invest in national capacity. In your first responder, your fire and first responders, you have to invest in seismic. For us is a big investment in terms of having a national grid to deal with seismic effects. You also have to invest in the building code. Building code and the regulation of building code is something we invest in. And then, of course, there's a NRIP, a National Risk Information Platform, that we are currently assessing our coasts. 60% of our population is on the coast and of our assets, so we have to do a coastal atlas. So we are investing in a risk information platform that can be used by our emergency response agencies, for instance. And then climate resilience means adaptation, right? So you will have to have better coastal structures, flood prevention structures, protected agriculture, water harvesting, and of course, renewable energy. These are all climate change adaptation investments. And so it's a big ask when you think about how much has to be done to make a vulnerable country resilient, right? And to, what I said before, that you have a vulnerable country with a vulnerable population that needs to be resilient, but we're only able to put 2% of our national budget to that aspect. So that's the equation that we are continuously trying to solve. And I think in the presentation later, we're going to talk a little bit more about how the evaluation of these programs are effective in working through that aspect. Finally, a few recommendations: identifying and engaging the vulnerable groups. That helps you after disaster strikes. You know where they are, you know who's vulnerable. A lot of times we talk about early warning systems, but you can have an early warning systems, but if you don't know where the people are, then you're not fully there. Of course, integrating DRR and climate resilience in all programs. I said that already. And so that's an important aspect for our development programs. You have to support all physical interventions with capacity building for both state and community actors. What does that mean? It's good to build bridges, it's good to build flood control, but persons need to know how to operate and maintain the infrastructure that is there. That's important. And then finally, whatever is successful, scale it. Scale it nationally, scale it regionally if you have to, and scope opportunities, of course. There are many trust funds that are available in the climate finance area. And so what we have to do is look for those opportunities continuously in our context of doing this DRM. And there's a picture of Kingston Waterfront. If you haven't been to Jamaica, please make it there. Thank you.
Thank you, Omar. Really appreciate. Let's see if Stephen can hear us.
I can hear you well. Thanks so much.
Stephen?
Can you hear me? Can you hear me from this?
Hi, Stephen.
Yep, I can hear you. No more audio from me?
So
My
while
slides come up,
I think
can
like
hear.
Stephen, yeah, he can hear us.
Online
Can you
hear me,
see us as
apparently.
well? Let's just see if
But not in the room.
Great. Great. That's great, Stephen. Can you just try to speak so we can see if can hear
I'm
us
doing
here?
testing. Let me know when it comes up. Testing again. I hear applause from another event. Another great speaker. Testing
Stephen?
now. Yep. I hear you. Testing again. Online, yep, it's confirmed that they can hear. So it's just
Okay, guys, while they try to figure out audio from Stephen, just very briefly picking up a few points from Omar. I think like what's very interesting to hear is how comprehensive the approach in Jamaica is. Just by looking at the presentation, you can see that it's not only disaster risk management, it's about solid waste. It is about environmental protection. It is about investments in operations and maintenance, right? So we can no longer afford to find and to spend budget on building new infrastructure, but not being able to maintain and operate that appropriately, because basically you're not going to achieve the mitigation that you really want through your project. So the other interesting thing that I have seen happening in the Caribbean after some of my work there, it's how the region has been very smart in using the social investment funds as a generic platform to promote not only the disaster risk management agenda. I think you touch upon a lot on the social aspect, and I have seen that clearly happening in Belize, for instance, which I believe they kind of carbon copy in a way the social investment fund process that has been set up in Jamaica, right? So again, it's a nice message from small vulnerable countries that are extremely exposed to natural hazards, that you cannot think in a silo mentality. If you do so, you're gonna run yourself in trouble. So let's see if we have any lucky to have Stephen
Testing
connected.
again. Can you hear me now? Testing. Any luck? I heard you great. Just from my side.
Yeah, and then okay. So hear him in another platform. Let's see if that works.
They were able to hear me on the online platform. People in the chat.
Hi, Stephen.
Hi, I can hear you
Hi.
now on this.
Okay, cool. So let's try to do one thing. I have my my cell phone here. I'm gonna put close to the mic, and then you talk over here. Let's see if that works. So we can have like
Alrighty.
audio here. Okay,
I love the adaptability.
Yes, that's called adaptive capacity. Yeah.
Exactly.
Okay.
So
Go
thank
ahead.
you so much, and thanks everyone again for your patience. Let's see if this works. So my name is Stephen Hutton. I come from a part of the World Bank called the Independent Evaluation Group, and I'd like to present some of the findings from an evaluation that we've just carried out. Yeah. On the work of the World Bank on disaster risk reduction. There may be an echo. Let me see if I can cut that off. All right, let's try again. So I want to talk about three things: about the evaluation itself, about some of the areas where the World Bank has been successful, and on some of the aspects of the forward agenda where we think the World Bank could do better. So first, the challenge in the evaluation. I hardly need to tell this audience why disasters and disaster risk reduction are important. We know disasters are a development challenge. We know they cause death, damage, contribute to poverty, that they affect low-income countries and the poor the worst, and there are people within those countries that are disproportionately vulnerable as well. So this was the context and motivation for our evaluation on the World Bank. So I worked for an independent evaluation department within the World Bank. We're independent in that we report to the board of directors, the representatives of the member countries, rather than to the president, the management, the operations people who are involved in projects. Our mandate is development effectiveness. We're part of then the governance of the institution on that, and we contribute. We have an accountability function. Did the World Bank achieve what it set out to achieve? And a learning function. How do we do better in the future? And as Fred, I'm sure, could tell you, we often give the operations people a pretty hard time when we think there's not good evidence or when we don't see success being achieved. So what is this evaluation about? So this evaluation covers disaster risks caused by floods, droughts, earthquakes, cyclones, other hazards. It doesn't cover technological hazards, public health emergencies, or other things outside of natural hazards. It looks at then the World Bank's support for most elements of disaster risk management. So it looks at risk identification, risk mitigation, disaster preparedness, and disaster risk finance. The main thing it doesn't cover is disaster response and support and disaster recovery and reconstruction that didn't include risk reduction elements. It also didn't include the private sector arms of the World Bank Group, the IFC and MIGO. So what did we find about how the World Bank is doing? So first, we find that the World Bank has developed and expanded a very substantial portfolio of work around the world on disaster risk reduction over the past decade. So we found over 600 lending operations, investments, or policy lending support and budget support, and over 500 non-lending operations with analytical pieces, diagnostics, technical assistance, and others. And we find a large upward trend, a tripling of this support over the course of the decade, up to a point of over 100 lending operations, new lending operations a year around the world at the end of the period. And this has occurred, we find, for three main reasons. First, because of the World Bank's corporate support for climate change as an agenda, a priority, and particularly climate change adaptation. Second, the availability of trust funds, particularly GFDRR. And third, the supportive global context, reflecting on the move from Hyogo to Sendai, the acknowledgement and understanding of client governments that this is a priority, something that made them willing to work with and interested in working with the World Bank on this topic. We looked then at the strategic relevance of the World Bank in this space on disaster risk reduction. So we looked at to what extent is it focusing on the most serious hazards in the countries that face the most serious risks. I'm not going to go in the detail of this figure, so it's a little complex and hard to read, but it basically does two things. So across different hazards, it looks at the degree of support that the World Bank is providing to countries facing high hazard levels as compared to others. And what we conclude is, first of all, for most hazards, the World Bank is providing lending support or other support in countries with high levels of that hazard. And second, that the World Bank's support is strategically concentrated on the countries with higher hazard levels as compared to lower hazard levels. The one exception is that some hazard types that are less catastrophic or less frequent, landslides or on the one hand, or volcanic eruptions and tsunamis on the others, receive less support even in countries that face high levels of those hazards. We looked at that. We know that to provide effective disaster risk management support requires an integrated approach. And so we asked, how often is the bank using multiple and synergistic pillars of disaster risk reduction? Is it combining hazard identification, resilient infrastructure, early warning and preparedness, and financial disaster risk protection? And we find that broadly speaking, it is, especially on the first three of those. So in this, in the graphic here, the dark green is the share of countries where the World Bank is providing support for all four of those pillars, and the light green is where it's providing support for three of those pillars. So in most countries, the World Bank is providing integrated approaches using three or four of those different pillars. The one with the least support is the financial disaster risk protection, which exists only in a minority of countries. We looked at how the World Bank has mainstreamed disaster risk reduction into sector operations that don't have disaster-related objectives and goals. So we found significant increases in mainstreaming support over the time period, especially in some sectors like transport and water. We found that mainstreaming had been particularly comprehensive in countries eligible for International Development Association, IDA, in small island developing states, and in IDA countries affected by fragility, conflict, and violence. We found that the World Bank has shifted from post-disaster response to pre-disaster risk reduction. So in this figure, the showing number of projects over time, the share of projects over time. The top dark blue line is the share of projects, of disaster-related projects that are doing pre-disaster risk reduction. The light blue in the middle is the share of disaster-related projects doing post-disaster risk reduction, and the yellow at the bottom is the share of post-disaster projects that are not that don't include risk reduction elements. So what we find is that shift towards pre-disaster support has been significant, and that the bank has built risk reduction activities into nearly all of its disaster response operations. We know that one of the big challenges for disaster risk reduction is underinvestment. We know it's difficult for countries that face many development priorities to sustainably commit to supporting pre-disaster risk reduction and building risk reduction into their programs. So we looked at case studies on how the World Bank has helped to influence and enable those countries to undertake risk reduction. And we found three kinds of factors in particular were really important. First, upstream analytical and diagnostic work that quantified risk, assessed costs and benefits, but also communicated those risks in a accessible and impactful way to the right decision makers has really influenced risk reduction uptake. Second, we found that progress has moved faster when the World Bank has targeted ministries of finance, planning, or critical line ministries like infrastructure ministries, rather than disaster agencies who often lack the capacity or influence to get investment programs to happen. And third, we found that the World Bank's support for disaster reconstruction has been a critical entry point for engaging then on risk reduction and developing risk reduction engagements. And so we shouldn't be expecting the World Bank or other development actors to get out of the business of disaster reconstruction and response. That's likely to always be an important role. We're running a bit short, so I'm going to skip this case study. What's the forward agenda? So what do we think that the World Bank could be doing better on? And on most of these, we then had specific recommendations that have been accepted by World Bank management, discussed by the board, and will be monitored and reported on over time for 4 years. So first, we found that there were, though overall the level of support was high, that there were some gaps in coverage for risk reduction, particularly in Europe and Central Asia and the Middle East and North Africa. There are many reasons for this. Risk reduction is not a priority in a number of conflict-affected countries. There are many small clients with limited lending envelopes and abilities to borrow. But we did identify in many countries that they are borrowing for infrastructure programs and potentially could address disaster risk reduction by mainstreaming that into these kinds of existing engagements. We found that the World Bank has been slow in incorporating the needs of vulnerable groups and projects. While they've increasingly identified and addressed the needs of women who are disproportionately impacted by disasters, there are relatively few operations that integrate the needs of identified disaster vulnerable groups, including persons with disabilities, elderly, children, and youth. We found that risk reduction engagements have missed opportunities to use conflict-sensitive approaches. So we all know that conflict and disaster risk are highly interrelated. Conflict can be a driver of disaster risk. Disaster risk can exacerbate conflict. But what we found is that risk reduction projects in conflict-affected areas have usually not been designed with a conflict-sensitive approach to support peace building, and that efforts to support a nexus program working on risk reduction and fragility, conflict, and violence in the World Bank have progressed slowly. We find as well that there's a need to bring more of a service provision lens to risk reduction engagement. So to be shifting from supply of infrastructure and construction and works towards sustainable service delivery. So 2 examples of that, right? We found that disaster risk reduction investment projects have often supported relevant infrastructure, but most don't explicitly address operation and maintenance that's required for long-term resilience. Second, we found that the World Bank has been more effective at developing disaster early warning system infrastructure than in delivering early warning system services, such as forecasting capacity and community preparedness. Finally, we find that there are sort of weaknesses in the evidence that's generated on the results and effectiveness of risk reduction activities. And we think that's important because it's a critical part of convincing clients and governments to invest and undertake risk reduction activities. So we find that risk reduction operations are not providing enough information about their contribution to development outcomes, to reduced economic loss and mortality, to reduced vulnerability, to reduced exposure. So sometimes we can't tell how much of a difference these large investment programs are making, whether they're really shifting the needle on overall vulnerability. Some examples, we find that most resilient infrastructure investments haven't provided information on resilient standards they were built to, even after they're completed. We find that for nature-based solutions is a critical area for building better evidence on impacts and cost effectiveness, as well as building better evidence on the effectiveness of policy changes that go beyond just sort of the next step in operationalizing a policy. I'm going to leave it at that, and thank you for your time. I hope that these are things that resonate as a forward direction for not just the World Bank, but for other development actors. Fred, I'm not sure how we're doing. I think we may be out of time for the session, so we may not be able to have a discussion.
Hello. Okay. So Stephen,
Hello?
let's do this. Let's have like 15 minutes question and answers. Omar, maybe you can actually join us here. I'm gonna keep that microphone here for him, and then I'll give that to you once we do. So Stephen, thanks for the presentation. Thanks for the patience. Again, guys, thank you very much for allowing us to navigate the technological issues here. But I think it worked well. So again, just as a joke, being in a disaster risk management conference, nothing better than to have to navigate like some unplanned events. Before Stephen, what I'll suggest, I'll throw a question here to Omar. Then you come in, and we have a nice audience here. I'll open the floor as well for whoever wants to make a contribution or a question. But two items that I actually found very interesting, Omar, from Stephen's presentation is one in terms of how the bank actually leans towards some of the disasters like floods, much more than landslides or earthquakes or tsunamis. And that might be actually something that comes from the demand coming from the client. Your perspective on as government of Jamaica, if that's the appropriate balance and weight. And second of all, a little bit of your insights for the audience here on disaster risk finance and insurance, because the Caribbeans, they have progressed quite a lot over the years on that, and larger countries like Brazil, we are lagging behind. So, and then Stephen, you feel free to come in after Omar, and then I'll open the floor here.
Hello. All right. Thank you. Thank you for that question. On the matter of landslides in particular and how the bank would finance those types of disaster recovery, I think what happens is that deforestation, for instance, strikes at a larger policy issue of housing, agricultural practices, and so the mitigation against landslides does not have sort of a panacea or a silver bullet where you can just apply a particular infrastructure to solve it. And so it's difficult for the country to engage in a financing program to mitigate against those type of effects. So I wouldn't be surprised to see a skew to other types of resilient infrastructure versus prevention against those types of issue, because it's just a wider policy country issue. On the matter of insurance, I mean, that's a great question, because the Secret, for instance, which is the well-known facility, started off sort of a rocky, let me use that word, because for one, it required almost a direct hit, as in the eye of the storm would have had to pass over the country for the country to see a payout. And our experience in the Caribbean is that, you know, even if the storm is 50 miles offshore, you can have significant damage. And so many countries were not. Fortunately, through discussion, there were some improvements to that model. The model seems to be working much better than it was when it was conceived. But as you can see in our Jamaica experience, we've also had to layer on the CCRIF, the cat bonds, and other government financed investments to sort of diversify the blend. So I would recommend that any country considering the insurance facility understand, just like any other investment, diversity is the best practice.
Stephen, any additions from your end?
I just say two things. So first of all, Omar, it was great to hear in your presentation how Jamaica is working already in many of the areas that we talked about on as forward directions. In terms of maintenance, in terms of inclusion, in terms of many other kinds of aspects that you were discussing. Second, on disaster risk finance, I think it's critical, exactly as Omar is saying, to see this as much more than insurance. Insurance has some roles to play, can achieve certain kinds of things, but we also did a deep dive on the effectiveness of insurance operations that the World Bank had supported, and found that many of them really struggled to get to scale, to achieve risk transfer at scale. Many of the most successful programs are still, for sovereign insurance, have provided very useful liquidity support, but they have the basis risk problem that Omar alluded to, that sometimes there can be serious disasters that don't trigger, and so still don't function them. And a number of countries then have stepped away from those programs. So I think it's critical to be thinking of disaster risk finance as more than insurance, as a balanced approach that considers and uses multiple different instruments to be addressing the financial risks posed by disasters. But I prefer to spend the rest of the time hearing from the audience in the room and hearing any questions or comments that people might have.
Thank you very much, Stephen. Let me open the floor. Any questions here? I really encourage you guys to actually come forward and ask questions. Otherwise, we can monopolize here the discussion.
Hello. Not anything, a comment regarding insurance. Basically, I'm from Panama. My name is Francisco Alvarez. I'm the director of investments and risk in the Ministry of Economy and Finance. And we are in charge of the overall program for disaster risk financing, in which we do have products, debt products within with the bank, and as well we do have the facility as one of our within our portfolio. And experience has been with the insurance mostly the fact that it is a matter of education, more docency regarding the fact that people need to understand the product in order to prefer the product and its fiscal benefits that it has in the overall health of the finances of a country. That this type of that these disasters may cause. So it's been more of a explanation and more of a education issue regarding the fact that we do have all these programs lined up to be able to continue to be able to use them. We are expanding actually our capacity within risk transfer programs with CRIP. So important.
Thank you very much. Any questions? Over. Okay.
Hi. Good seeing your presentation. I just got the last end of it, but very interesting. My name is Philip. I'm from St. Lucia, also in the Caribbean. What I was wondering is, my interest is, what's the Jamaican government doing in terms of data collection after, say, like an event occurs? Because what you have happening is some of these insurance or financing facilities, they want to know how much is needed to invest and how far the investment can go. So let's say the flood occurs. How many households were affected? How many people were affected? If the government already has that, at least a cursory amount, then when the agencies come in, they already know what they're dealing with and how many places are going to get, how many people are going to be affected. So I'm just wanting to know from a data collection point of view, is the Jamaican government actively have anything in place to facilitate that? Because sometimes that's the first part of any program that you deal with, and you do that in advance. It already helps the facility for insurance.
To be honest.
All right, thank you. It's a great question. And currently, our system uses data through our national planning agency that would include a survey of living conditions, the census, and local mapping. That's the current system. I had mentioned in my presentation the current development we have of the NRIP, which is a National Risk Information Platform, that's actually going to cut across where the vulnerability is for persons. So that platform now will be on our spatial data platform, and it will allow the ODPEM and other relief agencies to actually have real-time data whenever a storm or an event happens in a particular area. So it is an evolving process. And so between our coastal atlas, which is dealing with the vulnerable coastal areas, our risk information platform, which is island-wide, and the spatial data that we have currently, the platform we have, our GIS, that's what the government used as the main tool.
Thank you very much, Omar. Any further questions? Okay, we have one more here.
Hi, I'm Harriet Stone from the UK government, from FCDO. I wanted to ask about the evaluation and the finding, particularly around vulnerable groups not being incorporated into DRR operations as well as they should be. I wanted to ask if, is there a type of group that particularly is being missed out? Are there different types of hazards they're not being, catered for? Geographically, is the bank doing this well in some places or less in others? And different types of interventions, is it risk financing that they're missing out on, or is it other types of interventions? I just wanted to ask a bit more of the detail of what the issue is, and if there's any ideas of kind of what the reasons for that are, because we know it needs to happen. So I'm just wondering, why it is happening.
Stephen, over to you. Stephen?
So I didn't quite catch all of the question, but from what I caught, you want to know a bit more about the question on inclusion of vulnerable groups and so forth. So first, I would say that this is an issue that the World Bank has now clearly on its radar. It is recognizing as a critical next step. Over the last 2 years in particular, there has been a lot of analytical work conducted on the inclusion agenda, for different groups and including going beyond sort of a gender lens and looking at a broader inclusion lens. I think the challenge that the institution faces at the moment is operationalizing that. So getting it from sort of general analytics and diagnostics and figuring out how to build it into projects. There have been a few examples of that, but still that's something where a lot more work is needed. Fred, you could talk about some of the operational challenges in building inclusion into lending operations and investments as well.
Thank you, Stephen. Let me, I'm just gonna wrap up this session. It just came to time. Thanks for the questions, but let me just pick up from like the last 2 points. I think like the social portion, we are constantly challenged at the bank to justify our investments towards the vulnerable groups. So the question is not the sake of building a new highway or improving bridges for the sake of the economy, because we understand that's going to contribute to the economy. but then actually how that actually goes beyond that and addresses on reducing those gaps, right? So that's the same thing for housing policy, land use policies, right? So we tried actually to tackle the human development side per se from our operations, which is very interesting because we do have evidence, we have data that the capacity for those vulnerable groups to actually rebound from extreme events is much harder than more privileged groups, right? So it's kind of like the challenge for us to put together projects. That's why I see that very important portion of not necessarily DRM specifically focused agency to be walking the road with us, like the Social Investment Fund. It's one of the examples that allows us to go beyond our tunnel vision, right, on disaster risk management. The other one that I like to mention, and that was the point that was made on disaster risk finance and insurance. Again, as Stephen mentioned, as Omar mentioned here, it's beyond insurance for sure. I think insurance is a very kind of like easy word for many people to grasp. So the question in the Caribbean is that if you know that you're gonna crash your car every year because they have a hurricane season, would you be buying insurance or not for your car? Well, definitely will, right? So the question is, those countries are exposed every single year to significant event. That's a different thing when you look at, let's say, Brazil, right? So we don't have a hurricane season per se. We might have a very bad year and have a bad year and a worse year, but it's not that, oh, the season started, right? And that comes the financing portion that I think Stephen mentioned, right? Which it goes beyond that, how can I ensure that I do not crash my car, right? So putting right maintenance, checking the brakes, so on and so forth. And that's the combination, the package that we really need for us to have a more resilient communities, right? A more resilient world. So that's what we're going to actually address in some of the sessions tomorrow on resilient infrastructure, which is all this package coming from engineers, coming from economists, coming from social development people, that if we do still think as a silo mentality, we are not going to move as quick as we need. So let me again thanks Omar for coming all the way from Jamaica, spending this time here with us. Thank you guys for coming. Stephen, thank you very much for bearing with us on this technical challenge, but I think we managed to have our session. This report, I believe, is public available, right? So if you want to go ahead, download that. Again, the World Bank is one of the agencies out there, so there's lots of knowledge. So we have been doing this for over 10 years and more, and really looking to partner and learn from you guys. So thank you very much. Just join me in a round of applause, and thank you very much everyone that connected here as well.
Thank you, everyone.
Thank you. Good job.
When we have the next.
On Friday.
Site.
Thank you, Stephen. I'll call you afterwards. Thank you.